this video we're going to talk about the setups. I have 8 different setups that I use, okay? I know that sounds like a lot, but trust me, when you trade in the markets every single day or every week, you are definitely going to get used to these setups. I tell people, hey man, if you can remember 8 people from your favorite sports team, you can remember 8 different setups. Now, the good news is you don't have to use, or you in the beginning you're probably not going to use all 8, because for the most part I use mainly these 2 that's in front of you right here, the solid bar and the tail bar, and I also use the engulf and the exhaustion bar. Okay, those usually they show up pretty much for the most part. So as long as you remember those 4, you definitely be good. So let's go to these setups real quick. So this is the solid bar, okay, and this is the tail bar. So let me show you guys some more examples. Now the solid bar is basically the body, right, closing at its high. Me personally, I like to look for, if it's closed around 85% at its high, okay, that's good enough. So if you're new to the candlestick world, basically the high is the high of the candle, okay, the peak, and the low is the low of the candle, right? And the close is usually where the body is at. So you see the bodies right here. So this is the close right here. So this candle actually was here before, okay, but it closed down here, okay. So we want the bar to actually close at its high, okay, at least around 85%, okay, close to the high, and that's good enough. So this is a solid bar right here. These are solid bars right here. Now notice how this bar right here didn't really close at its high, but to me it closed, at least close enough. So I would say this is around 85% close to the high. So I would definitely use that bar right here. Same thing with here, okay. If I saw this bar right here at a key level, okay, even though it's not at the peak, it's around 85%. So that's good enough, okay. So let's look at some bearish examples. Now here's some bearish examples right here, okay, closing pretty much 100% at a low, okay. There's another actually solid bar right here. There's a small one right here. Here's another nice solid bar right here, okay. So those are the solid bars, and we're going to show you guys some examples on the chart, okay. Now let's go to the tail bars. Now all tail bars, they come somewhat different shapes, but they still look the same, okay. We have a nice bearish tail bar right here, nice size tail, small body, okay. Let's look at another one right here, a nice size tail, small body, okay. Let's look at another one right here, really no body, right. You don't see a body, but you see a nice little size tail. Definitely will get in that trade if I see that. We saw this one already, so let's look at this one, a nice size tail, okay, small body, okay. And let's go to another one. Now right here, this is a doji, okay, but I'm going to put it in a tail family because we still have tails. So we have a tail right here, and we have another tail right here. Now this doji looks like a cross, okay. So when you see this, it looks like a little cross right here. I still use these when I see them at a key location. All right. Okay, so let's go to the charts right here. We have a nice example. The market is going down, right? I want to get in right here. We actually have, okay, we have this one, a micro one right here, and another micro one right here. Now notice how the market came back into this horizontal line right here, rejection, a nice little tail bar right here. That's a nice entry, and you can definitely get in that trade. Now the time frame that I use, guys, I use the 4-minute and the 5-minute, okay. I mainly use the 4-minute, okay. You can use the 5-minute. I know some of you guys are going to ask me, why are you using the 4-minute? Trust me, one day I just pressed 4 and that was it, okay. There's no reason. The 4-minute and the 5-minute is pretty much the same, okay. I just use the 4-minute, strictly 4-minute for all my horizontal levels, okay, and the entries. So that's the tail bar right here. We want to get in as soon as a price goes below, okay, this candlestick right here, okay, this tail bar, and then you get in, okay. And we're going to go over, how long to hold in the next video. Okay, so this one right here, guys, we had a nice little impulse right here. Market pulled back, went up again, came back to this micro level right here. Gave us a nice little tail bar right here. You see this nice tail bar now. When we have a tail bar, even though the market is going up, okay, I know some of you guys say, hey man, this tail bar is red. It doesn't matter, okay? It doesn't matter the color. As long as we see a tail and a small body, we can get in, okay? So let me show you guys another example. Here's another example, okay? The market is going down. We have a break of this nice little trend line right here. It pulls back to this horizontal micro level right here. Got a nice little doji right here, this candle right here, and we went down. Okay, let me show you guys another example real quick. There you go, the same market going down. It came back to this level right here. Okay, and then it gave us a nice little tail bar right here and a small body and another move to the downside. Right, so that's tail bar. So let's go to the solid bars real quick. Okay, so these are solid bar examples. Now we have a nice little impulse right here, guys. It pulled back to grab some more orders at this nice swing high right here, and we have a nice solid bar right here. You want to get in as soon as it goes above this bar. Okay, so every candle we are looking for it to close first, and then the next candle, which is this candle right here, we're waiting for this candle to go above this candle so we can get in, right? And like I said, I'm going to talk about the stop loss and exits on the next video. Okay guys, another example right here. Okay, we have a nice little impulse right here, came back to grab some orders at this swing high right here. Okay, and we have this nice solid bar right here closing at its high, and then we wait for it to close. As soon as it goes above this candle, we are looking to get in. Okay, so let me show you guys another example. Okay guys, here's another example. Okay, we have a nice little impulse right here, supply, right? It came back to this area right here. Remember, sometimes it doesn't come back to the original breakout area right here. So we take the next available one, which is right here. Nice little main swing high, actually swing low right here. Came back into it, give us a nice solid bar right here. Okay, it's closing pretty much near the low right here of this candle, and we are getting in as soon as it goes below this candle. Okay, so let's go to the next setups. Okay, so the next setup we are going to look at is called an engulf bar. Okay, engulf. So we are going to look at what is an engulf. So an engulf, guys, is very simple. We want the candle, okay, to break the previous high and the previous low. So notice how this candle, right, went above this high, okay, and it went below this candle low. Okay, so the previous candle, okay, which is right here, we want it to go above and below. As soon as we see that, that is a engulf bar, and we want to get in. Okay, so let me show you guys another example. Okay, here's one right here. Okay, notice how this bar right here, okay, it went below this candle, and then it went above this candle. And with this candle, guys, we are not going to wait for this candle to close. Okay, as soon as you see it goes below this candle, and then as soon as you see it going above this candle right here, you can enter. Okay, we're not gonna wait for this candle to close. Okay, so guys, so we are at the charts. I'm gonna show you guys another example. So price is going down. It hits support right here. It bounced off support. We have a nice little impulse creating demand, right? And then it pulled back and then create another impulse right here, creating another demand area. So it came back down right here to this swing high. So as soon as price gets this level, we have an engulf bar right here, guys. Notice how this bar goes below this candle, and as soon as it goes above this candle right here, I'm looking to get in. Okay, and it gave us some profits on this trade. So I'll show you guys another example real quick. Okay, here's another example right here. Okay, the market was going up, we broke down, and then we created a nice impulse right here, guys. So let me show you real quick. Let me see. So we broke this right here. Now the market is going down. Okay, we had a nice impulse right here. It came back to get some more orders right here. It came close enough to the swing high, and we have this engulf bar. Notice how this bar right here, it went above this candle, and then it went below this candle. As soon as I see it goes below this candle, I'm looking to get in. Okay, so let me show you guys one more example. Okay, so in this example right here, we have a nice impulse right here. Demand is coming in the market. Like I said before, it doesn't have to come all the way back down. Okay, remember, we know better than that. Most people don't know. Most people just say, oh man, I wanted to come back down here. But you know, we know better than that. Okay, so we have a nice little breakout right here. Okay, and I'm looking for a micro level. Okay, because we created a new high right here. So we have a nice little micro level right here. Price pulled back to the micro level, and it went below this candle. Notice how this candle went below this one right here, and then it went above this candle. Okay, giving us a nice little engulf for a quick winner, right? All right, so let's go to the next setup. Okay, so let's go to the engulf trap. Okay, this is something that I learned just by studying the markets. Okay, you're not going to really find this in the textbooks at all. I just, discovered this by just studying the markets. So an engulf trap is just basically we're looking for an engulf bar, okay, in the opposite direction, and then we are looking to take the next available bar, okay. The reason why this works, I don't know the reason why it works, but I'm thinking that a lot of people would think, oh wow, a nice little engulf bar right here. Oh, that means that the market is going to go down, and I'm guessing that the smart money is looking to trap traders to go back up, okay. So we have a nice impulse right here, guys. We pulled back, okay, and then we have a nice little another impulse right here. Nice demand right here. Came back to this swing high level, guys. Notice how we have this engulf, okay. Now I want you guys to understand we want to take the next available bar, okay. So let me show you guys a quick example real quick. Okay, so here's a picture. Okay, the market's going down, right? Now the engulf trap, you want the engulf to be the opposite direction. So if the market's going down, you want to engulf, you want to show a green engulf, okay? If the market's going up, you want to see a red engulf, okay? So the market's going down, you see the engulf right here because this bar right here went below this candle and went above this candle, okay? Now, people will say, oh man, bias is coming in, okay? No, it's not, because we are looking to trap you, okay? So we are looking to get in the next available bar. Okay, so the next available bar means that whatever bar goes, whatever candle, okay, it goes below, that's what we're looking to get in. Okay, so let me go back to the chart. Okay, so in this example, the next available bar is this one. And like I said before, what do I mean by next available bar? Meaning, okay, whatever a bar, okay, breaks the next high. Okay, so this is the bar right here. So let's say that we had an engulf bar, okay, and we wanted to get in. Well, we'll wait for a price to break this high, but it didn't. It didn't break this high of this candle, okay? So the next candle we wait. Did it break this high? No, it didn't, okay? Next candle, did it break this high? Yes, it broke. This candle broke this high, so we're looking to get in, okay? As soon as it breaks this high, and looking for our profits. Let me show you guys another example. Okay, so here's a bearish example right here. We have an engulf. This bar right here went below and above this candle. As soon as we are at that key area, I'm looking to get in, okay? The next bar, it breaks. So it broke this bar right here, I'm looking to get in, okay? Let me show you guys another example, because sometimes when you have this engulf right here, okay, and let's say, I say, okay, this is a nice key level. If I notice that we had an engulf and it's coming to this level, okay, I want to get in the next available bar. So notice how none of these bars, we didn't go below none of these bars after this engulf, right? Now this is the next available bar right here. It went to this key level right here, okay, and then you get in. It gave you a nice little tail bar, and you can definitely get in, okay? So sometimes, even if it gives you an engulf and it's far away from the horizontal line, or swing high or swing low, okay, as long as it didn't break a candle, okay, you can still get in. So let's say that we have a engulf right here, okay, and then let's say that it broke this candle right here and went below this candle right here. Are we looking to get in? No, because we want it to at least come close to this horizontal line, and then we're looking to get in. Okay, so even if I see an engulf right here and it goes below this candle right here, I would scratch this trade, and I wouldn't look for any, engulf traps, because already, this already triggered. So I'm not looking for an engulf trap. I'll just probably wait for it to come to this level and to see if I see another setup, which we did. We had another setup right here, nice little tail bar right here, and you get in. Okay, so let's go to the next setup. Okay, so the next setup is an exhaustion bar. I love these. Okay, now this exhaustion bar is basically seeing, okay, a nice either red candle. If the market's going up, you want to see a nice size red candle. If the market's going down, I'm definitely going to show you guys down examples. We want to see a nice little green candle. Okay, and it's usually, these candles are usually bigger than the candles around them. So you will have like maybe medium sized one, and then you will have a big one. Okay, but we're looking for the market to give us a nice exhaustion. Now, the reason why we want to get in after we see a nice exhaustion bar is because that's usually a sign that smart money is in the market. The reason why we want to see this bar is because we can tell smart money is coming in, okay? Because what this is doing is basically shaking out a lot of buyers, okay? Because if you see this red big candle, okay, going in the opposite direction, and you're looking to buy, you might say, oh my gosh, you know what, I'm not going to buy because, too much selling is going on, okay? So we all know that smart money is looking to shake people out. When I see this, okay, I'm looking to get in the next bar, but bar has to give me some type of setup, maybe a strong looking bar, a solid bar, right? A tail bar, a doji, any type of setup that we use, okay, it has to give us that, okay? Now, let me show you guys another example. Okay, so in this example, I'm going to show you guys two examples, okay? So sometimes when I see an exhaustion bar, right, so let me just show you guys the trade, okay? So we have a breakout right here, right, that fell, and then you see smart money coming in the market right here, okay? Now, the first level I'm looking at right here is this, okay? Because, remember, sometimes it doesn't come back to the first level. So, if you notice right here, this bar is big, right? It's a nice little big exhaustion bar, okay? It's coming to this level, so we have 1, 2. Now, 1, 2 candles is good enough, okay? Because as soon as we see the exhaustion bar, it doesn't mean that, it's going to reverse right away. Sometimes it gives us 2 candles and then reverse, okay? So, it came to this level right here. It gave me a nice engulf bar, okay? I remember getting in this trade right here, okay? But this trade, I got stopped out, okay? It is what it is. Now, guess what? The next bar, okay, is another exhaustion bar, okay? Look how big this bar is, okay? A lot of people that want to sell, they see this bar, they say, oh my gosh, no, I'm not selling this. The bulls is here, I'm not gonna sell this. This price is gonna go up more, I'm out, okay? So they shake out the rookies and the new traders out, right? But we understand, okay, this is what these guys do, right? So I'm looking for another setup, guys. So what do I see right here, guys? I see an engulf bar right here. Notice how this bar right here went above this candle and it went below this candle. So I got in and, I got my profits off this one, okay? Now let me show you guys another one, right? Now we had support right here, guys, and the market pretty much went below support, but it came back above support, right? And I want you guys to see this, okay? So we have a swing high right here and also another swing high right here, okay? Notice how the market came back with a nice exhaustion bar right here. You see this nice exhaustion bar right here? That tells me that smart money is in the market, okay? The next following bar, we have a nice little solid bar right here closing at its high, and boom, voila, another good trade, okay? So let me show you guys one more example. Now, before we go to the examples, I want to let you guys know that exhaustion bars don't really have to be really big like this. You see how this big candle? It could be like this. See this size candle? As long as the candle is bigger than the candles that's around it, okay? This candle is bigger than, this candle right here. We're looking at that and say, okay, it's a strong possibility the market might bounce, especially if it's at a key level. Even this bar right here, this is a nice size bar, okay? Usually this candle is bigger than the candles that's around it. And we're looking for those candles to be at key levels so we can get in, okay? So let me show you guys another example. Okay, so we have the market giving us a nice little impulse right here, okay? Now notice how it's pulling back to this level right here, guys, right? Now notice how it came close to the level, but it didn't hit the level, okay? as long as it comes close enough, especially if I get a nice little exhaustion bar, okay, I'm definitely gonna take it. So we have the next bar is a nice doji bar. I'm looking to get in as soon as it go above this right here, and you know, voila, you got your profits. That's exhaustion bars, guys. I really love them because you can tell when smart money is coming in. So let's go to the next setup. Okay, so this setup is called the 1 2 3. It's a very simple setup, guys. All you need is actually 2 candles. Okay, once price pull back to these levels, you're gonna look for a lower high or vice versa. If it's going down, a lower low. So let me show you guys on a 1 minute chart real quick. Okay, so this is a 1 minute chart. Now you're not going to be trading a 1 minute chart, especially if you're new. Even if you're not new, you don't want to trade a 1 minute chart yet. Okay, the only time you trade a 1 minute chart if you're consistent with the 4 and a 5 minute chart. Okay, because I see a lot of new traders, for some reason they can't handle the 1 minute chart. Right now, what you have here is the market going up, right? Okay, it's pulling back right here, all right, and then it's trying to make another high. Notice I tried to make another high with this green candle right here, but it couldn't go above this high. So as soon as I see that, guys, that's called a 1 2 3. I'm selling below this candle right here, and I'm gonna put my stop loss above this high right here. Okay. So that's just a 1 2 3. It's very simple. All you need is the market going up. It pulls back, right? Just one candle. I don't care. Just one candle, one red candle, and then we need the next candle to try to go above this, but it can't. And then if it can't go below that, and it goes below this candle, we're getting in, right? So let me show you guys another example. Okay, so in this setup, guys, we have the market breaking this trend line, nice little impulse, created a new low. It came back to this micro horizontal level right here and gave you a nice little 1 2 3. Okay, market pulled back. It tried to go higher. Okay, notice how this green candle tried to go and create a new high, but it couldn't. And then as soon as it goes below this pivot right here, okay, now we have this pivot right here. So we have 1 2. So this would consider 1, this is considered 2, and this is the 3. Now, I notice a lot of new traders, they get confused when they count, so you don't have to count no more. As long as you see a lower high or vice versa, if we're going up, when it goes below this pivot, this swing low right here, when it goes below, that's when you want to sell, right? Now, a lot of times when I'm trading, I usually get a signal way before I see a 1 2 3. So right now, you see a nice little solid bar right here. I'll be getting in right here. But like I said before, these 1 2 3s are very good too. Just in case you don't see a signal bar before you see it 1 2 3. Okay, now, okay, so let me show you guys another example. Okay, so here's another example. Okay, we have nice little impulse right here, guys. All right, smart money came back to this micro level right here, this micro swing high. Now it gave us a nice strong bar right here, a nice solid bar right here. Like I said before, I usually get in before the 1 2 3s. Okay, but just in case it doesn't give you a signal, you can, you know, use a 1 2 3. So notice how we have a nice pullback to this level. Okay, it went up, it pulled back. Okay, it's a lower low. Okay, meaning that this candle right here didn't go below this candle. Okay, so this low is lower than this low. Okay, as soon as I see that, when it goes above this candle right here, this red candle right here, I'm looking to get in. All right, so that's a 1 2 3. Okay, guys, now let me show you another version of a 1 2 3. Okay, so this version is a 1 2 3, but it's a broken 1 2 3. The reason why is because a regular 1 2 3, right, we are looking for a lower high. Okay, or vice versa, a lower low. Now this actually gives you a higher high, but notice how it can't close. So we go up to this level right here. It makes a high, but it can't close above this candle right here. Notice how it can't close above this candle right here. All right, and then the market goes down. So when I see that, I want to sell as soon as it goes below this swing low right here. Okay, so let me show you guys one more example. Okay, so here's another example. Notice how we have smart money come in, nice little impulse, nice exhaustion bar right here. Okay, Now notice how we have the market's going up, right? And this candle goes lower than this candle right here, okay? Now, but it can't close below this candle, okay? Now, as soon as the market can't close above this candle, I'm looking for an entry right here, okay? That's if I didn't get another setup candle before this. So we actually did. We have a nice little doji right here. So if I got in this doji right here, probably got stopped out, okay? And then I'll probably re-enter right here, right? And then give us some nice profits. So that's it. And I'm going to show you guys another setup that I use. Okay, so the next setup is a trend line break, okay? We have a nice little level right here, micro level. It didn't touch it, but it came close enough. Okay, we have a nice little trend line. I usually like to have at least 3 connection. We got 1, 2, and 3, okay? And as soon as it breaks a swing low, okay, that's what I'm looking to get in, right? So let me show you guys another example. Okay, so we have a nice little impulse move. We want price to come back to this swing low area right here. We have a nice little correction, you can tell, looking like a zigzag, okay? As soon as it breaks this trend line right here, I'm looking to get in. So as soon as it breaks, me personally, I'll probably wait to it either break this low right here or maybe this low right here, okay? So I'm looking for it to break some type of swing low, okay? So either this one or this one, okay? And I'm looking to get in. So let me show you guys one more example. Okay, so here's another example. We have a nice push up, okay? Pulls back to the swing high right here. It gives us a nice little trend line right here, guys. 1, 2, 3 connection. We wait for it to break this swing high right here, and we get in the market, right? Okay, so in this setup, you will put your stop loss underneath here, the swing low. As soon as it breaks this swing high right here, you put your stop loss right here. Okay, that's how you play these trend line breaks. All right. Now, another thing is, let's say that, okay, the market was going down, and let's say that the market was, you know, down here, okay, before it went to this swing high. So if the market is right here, and we have this next swing high right here, guys, from here to here, you know, that's a big stop. So what I would tell you guys is, if you don't see a swing high and the next swing high is far away, the next thing you do is just wait for it to break the trend line. Okay, so let's say the price was right here. Okay, so just wait for it to break the trend line first, and then you can get in. Okay, but if the swing high is near, okay, it's right there, let's wait for the swing high, because it's a little bit more confirmation once it breaks the swing high, because it's telling us, okay, we're making higher highs, so we can, you know, most likely go up more. Okay, so that's it. I'm gonna show you guys one more setup. Okay, guys, so this setup is pretty much a solid bar followed by another one. Okay, so if I see this type of setup right here near any type of horizontal line, okay, I'm gonna get in as soon as it goes beneath or underneath this candle right here. Okay, guys, it doesn't have to close. So usually when we are looking for price to give us some type of setup, okay, we want the candle to close. Okay, but when I see this right here, I don't want the candle to close. As soon as it goes underneath this previous candle, I'm going to get in right away, because this tells me that you know, it's a strong possibility we continue to go down, because you know, we had a nice little pop up, okay, and then next thing you know, we have another solid bar. This basically wipe out this bullish one right here. So automatically, I'm not waiting for this to close. The reason why I'm not waiting for this red bar to close, because a lot of times I see that this red bar can actually continue to go all the way down, maybe to here, and then close. Okay, so I want to get in right away. Let me show you guys another example. Here's another example, guys. We have price impulse comes back to this area right here. Notice how we have a nice strong bar right here, then another bar right here, guys. Swallow that bar up. We'll just wipe this bar out. I'm looking to get in right away, okay, and, you know, ride this baby up, okay. So let me show you guys another example. Okay guys, so here's a next example right here. We have impulse pulled back. Okay, you could have definitely got this move right here, but that's not the move. We're looking for this one. Another impulse pulls back to this swing high right here, guys. And we have this nice solid bar followed by another one. Okay, and now like I said, I'm looking to get in right away as soon as it breaks this high and, you know, look for some profits. Okay, so that's the end of this video with the setups. I will see you guys in the next video.